Hey guys, it's Nick, and in this video, I want to talk about the oil spill in California by Amplify Energy. I want to look at the spill, compare it to other spills in California, and compare it to a big spill like the BP spill to get an idea of the magnitude of it, and talk about Amplify Energy stock. What is the likely effect going forward for this company because of this spill? So the stock is down about 45% today. Is this a buying opportunity, or should you stay far away from it? So let's take a look. So in this article by Bloomberg, it's saying California's worst oil spill in 27 years means weeks of cleanup. And this is somewhere around Huntington Beach. So the spill began on Saturday and dumped about 3,000 barrels or 126,000 gallons of crude into the Pacific Ocean near the seaside community of Huntington Beach, which hosted the U.S. Open of surfing last week. And they say this is the biggest disaster since 1994 when an earthquake split open a pipeline and poured about 4,500 barrels into the sea. So this is less worse than that, apparently. So the owner of the pipe, Amplify Energy Corp., tumbled as much as 45% on Monday, and it says the spill comes at a time when regulatory skepticism of the oil industry's environmental practices were already sky high. So just last week, Santa Barbara County Planning Commission voted to block an ExxonMobil Corp proposal to transport crude by tanker truck and restart 3 offshore platforms in the area. So they are already unfriendly to oil and oil companies in the area, and I'm sure this is just going to make things worse for Amplify and other oil companies in California for sure. The disaster should embolden congressional Democrats to pass legislation that would protect places like Southern California from such incidents. So a wide swath of beach and ocean remain closed, and more than 2,000 feet of floating barriers have been deployed to help contain the spilled crude. So this is a look at the spill. So 126,000 gallons or 3,000 barrels sounds like a lot, but let's compare it to one of the biggest oil spills, the Deepwater Horizon, back in 2010 in the Gulf of Mexico. And that spilled 3.19 million barrels of oil. So that spill was 1,000 times larger than this California spill, just to put it into perspective of how big this spill really is. So what happened to the company that was responsible for this spill, British Petroleum? Let's take a look at the chart. So here, British Petroleum was around $60 before the spill in 2010. After the spill, it dropped as low as $27. And I remember this, that a lot of people assumed that British Petroleum was going to go bankrupt over this. And it was really political because British Petroleum is a huge company, and a lot of people in the UK depend on BP for dividends, retirees, and that kind of thing. So this is not the same thing. British Petroleum was really big and really important. Amplify is not. So let's look at some info on Amplify Energy. So on Saturday, Amplify Energy's subsidiary Beta Offshore noticed an oil sheen roughly 4 miles off the Southern California coast and notified the U.S. Coast Guard. They then shut down all its production and pipeline operations at the Beta field. So it says the company may not only have to pay fines, but is also losing production during a period when oil and natural gas prices are soaring. And so that Beta field was almost 14% of Amplify Energy's net production in the fourth quarter of 2020. So Amplify stock has been doing good lately because oil and natural gas prices are up, but this could put a damper on their stock and on their company. And Phillips 66 was Amplify Energy's largest customer in 2020, accounting for 23% of its revenue. So the latest is that they're saying there's no more oil leaking from Amplify's assets, but several local, state, and federal agencies are involved in recovery efforts, and the extent of damage is anyone's guess for now. So once all of these agencies get involved, you can be sure that there's going to be a lot of fines and litigation and all kinds of costs involved in that for Amplify Energy. And so this is really bad luck for Amplify. Just last quarter, the company announced higher capital spending plans, including on the beta field, to make the most of the rebound in oil and natural gas prices. The company also upgraded its free cash flow guidance to a range of 45 million to 55 million for 2021 and more than 200 million through 2023. So let's take a look at Amplify Energy. They are a very small company, market cap $118 million, and their earnings per share is they're losing $3 a share in the last 12 months. These are their annual earnings: loss, small gain, loss, big loss in 2020, and even their quarterlies are still losing money. So the second quarter of 2021, they lost 35 million on 80 million in revenue. So even with gas and oil prices up, they are still losing money right now, and this is not going to make anything better for them anytime soon. So looking at a monthly chart, they were $22 as far back as 2017, and they were under a dollar as far recently as 2020 or so, and just now they've gone up in this last year to like $6. So now that the stock is down 45% today, is this a good place to buy the stock, that it's due for a rebound and that this is overblown? Or is this going to cause them to maybe go bankrupt or pay out a lot of money in fines and maybe have to shut down their beta field in California? I'm not sure what's going to happen to Amplify, but it's not that strong of a stock or a company to begin with. And so something like this could put a real damper on their growth back to profitability, or even put them out of business. So it's a real risk to be getting into this stock after what just happened. Now, if you're thinking of actually buying this stock on the 45% dip, it's possible that it may bounce 10, 15% or something like that. But long term, it's probably going to have some headwinds. And so, like I always say, don't bet the farm in anything, especially something speculative like this. As an example, just look at this article from Zacks Equity Research, Monday, October 4th, 3:30 a.m. that this was published. Now, this spill happened on Saturday. So this spill had already happened, and Zacks is coming out saying Amplify Energy soars 8.1%, is further upside left in the stock. So they kind of talk up the stock a little bit, talk about the recovery in the crude price of oil and how their earnings represent a year-over-year change of 300%, and they're expected to be 66 million, up 25% from a year ago. And they say that a stock's price usually doesn't keep moving higher in the absence of any trend in earnings estimate revision. So make sure to keep an eye on Amplify going forward to see if this recent jump can turn into more strength down the road. So now Zacks obviously couldn't know about this pipeline burst or whatever. I'm just pointing this out just to show that even a company that has positive things going forward and earnings improving and stuff like that, something like this could happen and cut the stock in half. And so that's why I say don't bet the farm on any one stock, because this could happen to almost any stock. And it is not a fun feeling to wake up one morning and see that one of your stocks, which you have a big position in, is down 45%. So what does this mean for Amplify as an investment going forward, if you are already invested or if you are thinking of investing in Amplify? If you are already invested and you woke up this morning and saw your stock was down 45%, what do? Of course, it depends on how big a position it is to you and how much it means to you. I would guess that the stock is probably going to bounce a little bit after the initial shock of the news wears off and people realize that it's not that big of a spill. But then again, it is California, and so they amplify everything, and they already have a bias against oil and oil companies. So they will definitely try to make an example out of Amplify. So long term, I don't know the effect on Amplify, the company, or the stock. But short term, if you're looking to buy it for a bounce, it probably will bounce a small amount in a week or so, I would guess, but I wouldn't put a lot of money into it or a large portion of my net worth into it for sure. It is probably more just a trade on a quick bounce. So guys, that's a look at the oil spill situation in California and Amplify Energy stock. Like I said, never bet the farm on any one stock because anything like this can happen anytime. If you like this video, hit the thumbs up and I'll see you in the next one. Thanks for watching, guys.